Hey everybody, welcome to the deep dive. We'll call it Tariff Edition. And so today is Monday the 12th, and I'll tell you what, we just had some news come out over the weekend that the United States and China have come to some level of a at least preliminary agreement as trade is concerned, and we're seeing some decreases coming out as far as the tariffs between those two countries. As you're aware, we got as high as 145% coming from American tariffs on Chinese goods, and up to 125% on Chinese tariff of American goods, and that's all being decreased at this moment. And there's also other issues as far as the trade happening. Keep in mind, we said back in February that we were going to see an event, and so the event really was Liberation Day. Well, what do we mean by an event? And so the markets became overvalued throughout all of last year. Whenever the price of the stocks far outpaced the earnings of stocks, and it was the third highest recorded time in the entire history of the U.S. stock market, of which the as far as with the Schiller case, PE multiple ratio was actually at the third highest level. The next second highest level is actually right before COVID hit, and the time before that, it was actually back in January of 2000, right after we had the peak in the U.S. equity markets related to the technology and the internet boom of the late 1990s. And man, we saw 3 years of the stock market decreasing then in 2000. As far as with negative rates of return, it took over 12 years to get back to what it was back in January of 2000. The fourth highest time, as you may remember from previous conversations, was actually in December of 1929, right before the Great Depression. So highly valued market. It typically takes one singular event to cause the market all of a sudden pull back. And again, that event was Liberation Day. The coined phrase from President Trump of trying to go about in trade negotiations. And they use tariffs as the blunt instrument to get people to the negotiating table, and it's worked so far. We'll see how it plays out in time. And it's always, we're a big believer of truth in time when it comes to policy decisions. Across the board, we did see the stock market drop down. It touched 20% down. And as all of you, as being great students of the market, know that 20% pullback from the high is when you actually enter a bear market. And we briefly touched it for one day and bounced off of that level. So I'm not sure if we're going to say that's the beginning of a bear market or not. We'll have to see how the market goes from this point forward. That being said, with the announcement today, the stock market is up big, and we're kind of getting back to some key levels. So we said into our market play a little while ago that we need to close above 5,833 as far as on the S&P 500. We're right at that mark right now as we speak today. We need to see a close above that, and preferably a close above that for 5 days in a row. And if we see that, we can say we're kind of out of this thick mess that we've been experiencing for the last month and a half. And that being said, if we happen to go above that and then come back down a little bit, we could see some downward pressure depending upon whatever the markets do. At this point, we're kind of 2 steps forward, 1 back. Now, that being said, we did hit a low. Looking at a chart over here, it looks like back on the 7th of April. We hit that low, we bounced off of that, and then really from about the 21st, 22nd of April, we started building stronger momentum the last 3 weeks. And you'll notice in looking at statement, we started feathering back into the equity markets around that point in time. And earlier at the end of last week, and then also the first part of this morning, we actually re-entered the market. And currently, in spite of all of our portfolios, the most we're sitting in cash right now is 15%. So we actually were able to weather and miss out on a large portion of that downdraft we saw from the February 18th highs all the way down to that bottom part. We were able to get back in within about 5% of the low, and so feel very good about that. And we'll see where things go from here. We're still holding about 15% cash and across most portfolios, as far as with our core passive equity ETF and also in our stock, growth stock, and momentum stock, and our income stock. Because we're still going to wait and see for the confirmation. If we do see 5 days closing above 58.33, well, then we can say, hey, we get the other 15% redeployed at this point. Across the board, everyone is sitting really in great shape and really pleased with our technical analysis and what it's proved out. I will have Connor come back on sometime in the next couple of weeks and go some more detailed numbers and looks to see exactly where we're at. But across the board, guys, decisions that were made at the end of last fall, all the way through here this first part of the spring season has really benefited you all nicely, and very blessed for that. Do want to give a couple other updates real fast. We're kind of waiting through tax season, and we have expanded our relationship with a couple different tax planning firms. The one that we brought on board from Roanoke, Virginia, and walking through a lot of their processes right now. And we're seeing some very encouraging, rewarding things with them. And the second one is we started a relationship with a firm based in Bangor, Maine, and they have an entire team nationwide of CPAs and enrolled agents. And we're actually making available to everybody a deep analysis of last year's tax return, 2024 taxes that were just completed here in the spring of 2025. To actually look to see if there are ways to save money on your taxes going forward this year. The cost to do that is $300. And we do have a guarantee that we will make sure we find at least $300 in savings. Otherwise, it will refund back to you that $300. And if you want to take a part in that, we have a lot of people lined up right now taking part in that. If you want to take advantage of that, definitely reach out to your advisor and chat with them. And they'll get you the instructions of how to help us get that accomplished for you. Basically, we need a $300 check, and then also we need a copy of your return, which you can drop it off. You can email it to us, or send us a digital copy. Either way, and we can get that analysis done for you. So far, we've had a number of really strong suggestions coming out of that, and looking forward to seeing how that plays out really in time as far as the benefits to our clients. We're still continuing to work as far as the tax preparation for next year. And that should be an announcement coming up later on this summer, probably the 1st of July, on what we're going to do with that. And we do have a number of really exciting things in the works, both for our private equity inside portfolios, small company ownership inside portfolios, actually owning professional sports teams. They're making profits off of that market share, which is a phenomenal thing. Stacy and I actually got invested in that area earlier this year, and very pleased with that. Then on top of it all, we're also continuing to dig deeper as far as in the overall high net worth suite of solutions. And really, as far as taking part in that, you have to have an investable assets according to the Securities and Exchange Commission of $1 million or more. And if you do, reach out to your advisor. We'll make sure to get you on the list whenever new opportunities come available. Across the board, everybody, deep dive has been phenomenal. We'll be able to dig a little bit deeper and let you all know kind of what's going on, how things are moving. And definitely make sure you reach out to your advisors. If you have more money sitting aside in cash and checking accounts and savings accounts, right now is a great time to start getting that put into your brokerage accounts. Get that switched over. And if you also have dollars that are potentially for Roth conversions, I'd encourage you to take advantage of that here in the next couple of weeks. Reach out to your advisors on that also. Anyway, everybody, thank you so much for the trust you placed in our firm. We so appreciate you. And again, looking forward to chatting with you later on this year. Talk to you guys later. Bye-bye.